Is it? Oh, a bit of echo in here. Wow, it's like being in a different house, man. Hey, welcome to the Closing Beat, everybody. Happy Thursday. How you doing? There might be a little echo today because we're in our new space. Finally, actually. So if you could only see like what's behind me, at the moment it's just a big open mess, like as far as you can see there. So we'll give you some updates there, but it's just a huge mess. We have everything officially moved over. I hope this is working just fine. It seems like everything's going well, but yeah, we do numbers. We don't do the sort of video tech stuff. So if anything goes wrong today, it's Cody's fault. All right, so man, it is so big here. The office here is kind of, the office space, which is back there, is a little bit more official and things like that. Nothing that we're used to if you've ever seen our other office. So I've been teasing Cody all day with this corporate talk. Like he'd ask me, like, can we put this over here? Should we put that there? And I'm like, I don't know. Did you ask Steve in compliance? You got to talk to compliance about that. I don't know. I'm busy with the Q2 numbers. I got to focus. And I turned that thing off, man. And so if there's weird noises, yeah, it's because we're still learning the building and getting used to that there. But all is good so far. There we go. Yeah, there's funny ghost noises around here. Anyways, you're not here to see that. You're here to talk about the stock market today, and I got some good stuff for you. I knew I'd be a little busy today, so I did a little preparation last night. Also, tonight, our Wine and Wealth class is going to be extra special. It's going to be a sort of a unique one that probably not many people talk about. We're going to give you a little sneaky 401k tax trick that you can use. I covered it years back, but it's becoming increasingly more important with the potential tax law changes. So we're going to get into some geeky details there. I hope you're ready because we're going to try to have the board or something. We're going to have to detail this out. So we'll do that tonight. It's for clients there at 8 o'clock. Eastern time, so we'll be doing it from right here and we'll get that started. All right, so the stock market today, initially not a bad thing. We take a look over here. I'll use the S&P 500. We started off with a decent kind of a move. It was a little bit lower and it started with a decent move there when the jobs numbers came out. Initial jobless claims fall to a new low since really the start of the virus, so that's good news there. 16,000 fewer jobless claims than expected. That's 4 weeks in a row of declines overall, and that was a helpful boost to get the market started there. And I'll start with the NASDAQ here. As far as the NASDAQ goes, it's actually starting to close the gap with the S&P 500 for first place. There's about a 1.5-point spread at the moment. So the sell-off during the day here actually hit the 50-day moving average and started getting things going a little bit. Not too bad there. Tech led the way. So if you're looking around today, it's the big tech names. They helped out. We talked about Microsoft. Yesterday, we talked about the idea of these names needing to help. I shared that data with you on how a lot of them were just not helping. Well, today you got that. You got NVIDIA also helping out today with about a 4% gain. That's earnings related. We'll talk about that later. You got Netflix. Good move for Netflix here. Still in a sideways, choppy, boring kind of a range here, but good move to maybe kick things off and hopefully get a new uptrend started if that's the case. Now, semiconductors also, I know I'm going fast here, but there's kind of a lot to cover. Semiconductors actually helped out as well. Notice they've been selling off. We use the SMH to take a look at that. You've been getting this pullback in semis, and today was the first day where you finally started seeing across-the-board attempts at a little bit of a rally. There's Applied Materials, if you like the machinery, semiconductor space. KLA 10 Core, one of my favorite to look at, finally getting a bounce after the pullback. Just a uniform across-the-board move, and a lot of that's going to have to do with NVIDIA and their earnings that came out. You had Google's uptrend slowed down just a little bit because Russia's thinking about fining them $6 billion, which is not the first fine they've ever paid Russia. But yeah, not looking good there for that one. So the uptrend just pausing for a moment. Let's see what happens there. That's the kind of mentality that you have there. They didn't delete some illegal content. So kind of interesting there. We'll see how that shapes up. And, the normal rivalry going on. Anyways, the S&P 500 at the moment has attempted to bounce off the 50-day moving average. You can see it. It's my blue line there. It's always my blue line. That's what you have going on there. Weakness in value names. That was the theme of today. Growth stocks did their part. I talked to you about the NVIDIAs and Microsoft and such, the other growth, Netflix and things like that. I'll give you one. You want a stats play? It's been a while since we've done this. So stats plays are where we actually give forward projections using any stat that has to do with what we're talking about, right? So what has happened anytime something has currently happened? That's a horrible way of explaining it. Let me explain it with the actual stat. So Kroger currently finds itself extremely extended, right? You can see it if looking at the price here, just extremely extended. It's rolled away, and well, we would all say it's a little, overbought would be a fancy way of saying it. Well, anytime Kroger finds itself this extended, in other words, just over 3 standard deviations away from the 50-day moving average, that's geek talk there, I usually just say extended, looking forward 5 days, just 5 days, what's the performance when it finds itself as extended as it currently is? So the 5-day performance on average, negative 1.98%. Anytime Kroger is this extended, 5 days later it averages a decline of about 2%, just a way to look at it. It is only positive 5 days later after being this extended 25% of the time. So very rarely does it stay up here. What does that tell you? It doesn't mean go out and bet on this happening. It means that if you own Kroger and you're like a long-term investor, you go, I get it. This rocket ship can't stay up here forever. It's going to take a break. I'm ready for it. I got my mind right. And so that helps you out looking through that. If you're waiting for a pullback, then odds are 75% chance that over the next 5 days, you'll get at least a 2% pullback. So I thought I'd share that with you. I'm going to hit the Dow real quick so Cody can do his thing, but the Dow back into this pullback range here. Does it bounce? Right? This is the weakest of the uptrends in the markets. A lot of the other indices are besides the Russell, trending higher. And they've pulled back now to a known support area that's nice and strong and trending higher. I don't know so much about the Dow. I think it's just trying to make its way through earnings season. We'll see what happens. But let's see if this works. You want to play Guess the Dow? Let's see where we stand if you are playing.
Yeah, we got a fresh leaderboard today. It's super weird. I can't hear him. I got nothing. I'm just kind of guessing here. But we got a fresh leaderboard today. We got Andrew, Charlie, Michael, Caitlin, and Henry. Those are your top 5 today. And yeah, again, he can't hear me, guys. The view of the windows, by the way, is incredible. But yeah, that's all I got.
Okay, what'd he say? I can't. So I can't hear him. We realized that when we moved everything. He's in another room way over there. I can see, but I have no idea what he said. Is he like messing with me or something? That was a bit of a hiccup today. I'm here, he's way over there, I could barely hear the mumbles over there. We're going to have to address that because you can't, I'm not going to let him just have the mic and not know what's going on there. Come on now. All right, you ready for something interesting here? The Russell. Getting a lot of questions about the Russell. Now stay with me here. This is not, if it doesn't seem interesting initially. If you look at the Russell, what's something that you notice? And I've looked at pullbacks, I've looked at extension, I've looked at price volatility, we've looked at option volatility. I'm looking for a unique way to show what could possibly happen. One thing that's easy for everybody to understand, look at the blue line. The blue line is not trending in any direction. And so we said, okay, well, if it's flat, is it abnormally flat? And if it is, what happens afterwards? If it's not abnormally flat, then maybe this is just no big deal. So we were looking to see if the price movement, by referencing the 50-day moving average, was presenting anything interesting here, just a different way to look at it. So what we did is we took the high and the lows of the 50-day moving average. In other words, the blue price, what price is printing over here, we took the highs and the lows, and we started looking back, just looking back and going, all right, how tight is this relative to history? In other words, how consolidated is price action relative to history there? Year to date, the Russell's still up 10%, not a big deal there. But the 50-day moving average is the flattest that it's been since 2019. And that doesn't sound like a big deal, but when you start looking further back, it's the flattest that it's been in a long time, taking that out of the equation. So here's what I want to show you. Here's the last time the Russell 2000, I shaded it for you, traded in a range where the 50-day moving average, the difference between the highs and lows, the spread was really tight. I wanted to show what happens afterwards. You usually see that there's an initial breakout. In fact, if you look forward for any performance after the Russell has done this, the initial performance is positive. After that, in that 6-month range gets a little bit shaky, but that's not what we're interested in right now. We're trying to see what's the next direction for the Russell. So here's the last time that happened. The blue line is going to be my reference point. We look back just a little bit further. You got 2017. Yep, I'm going to show you each one of them. So here's the 50-day. You can see what I'm highlighting. It is flat. What was the next move? At least initially higher, and for the most part, ultimately higher. Looking back a little bit further, this is an outlier, right? The 50-day moving average, nice and flat. The spread between the highs and lows, very flat, very quiet performance. In this case, we broke down out of that range, right? There we go. We go a little bit further. It doesn't look like this because this is a smaller time period here, so it looks like it's more wavy than it should be. This is a period of time where we saw that same thing. You got sideways movement here. The range is a little more consolidated, and also price is a little bit lower. The immediate initial move was lower, but we ended up trending higher. It was like a false breakdown there. If you look at 1991 and 92, yep, I pulled out each one of them here, man. Took my time on this one. You got a sideways moving average here, very tight relative to normal performance, right? The Russell doesn't have normally a flat 50-day moving average. Initial move to the upside there. And lastly, this is 1988 to 1989, right? Who else shows you this kind of stuff, right? You got the Russell moving flat here as indicated by the 50-day moving average. The move outside of it when it started to trend, I'm going to say is initially lower by just a couple days. And then what happens? You're higher. So when you have those flat times, and even when it starts to push lower, it's usually a fake out. It's a buyable event. There's only one time, that was before the virus hit there, there's only one time where it starts to fall and continues to fall. Every other instance, and that's all of them, where you have the Russell 2000 as with a basically price as condensed as it is right now, if there is a downward move, it's a fake out. It has been a fake out. And in those first 3 months, that's where all the excitement is and all the gains are. So in other words, I'm just sharing that with you to say, don't give up on the Russell. If it pulls back, is there some way you can take advantage of it? Is it time to put together a shopping list and go look through small cap stocks and see if you want to participate? So anyways, if you look 1 month later from the time where the 50-day moving average wakes up there, it outperforms itself. 1 month later, average performance 1.3%. The normal 1 month period of times performance for the Russell is 0.9%. So it outperforms itself when it finally wakes up out of this sideways range. I did 3 months. I did 3 months as well for you. If you look 3 months later, it outperforms itself significantly, and you just saw that on the charts. 6.7% after coming out of a sideways consolidation versus 2.9% is the average 3-month performance of the Russell in every instance, right? So you got outperformance there. 6 months later, this is where it starts to get a little bit rough. It's still good leading up to 6 months. 10.4% is the average versus 5.8, which is the average all periods of 6 months that are combined there. 1 year out is where, from 6 months to 1 year is where it gets a little bit shaky. It underperforms itself. So in other words, if we see weakness in the Russell, you kind of want to go shopping a little bit and look for some things there, and then think of it as being a 6-month hold, unless there's a reason you put a trailing stop or something in there. So just a different way of looking at it. I know that one's probably not for everybody, but I have fun putting these things together, so I thought I'd share that with you. All right, let's do a sector breakdown here for the day and get moving, because I spent a little more time on that. Tech was your leader today. Not much to talk about there, just the obvious leader. If you're looking at the tech sector, semiconductors are going to be part of that, and definitely one of the tailwinds, as you would say there. You got real estate, the best performing sector of the year, actually. Real estate up 27 and change. No, it's the second best, actually. Today it makes it the best. So the best performing index actually for the year. You look at consumer staples, nice and tight, moving at highs. That's people playing defense a little bit. They're not too sure about this market. Healthcare continues to be on fire. Quite impressive there. And real estate getting a little bit of a move higher. Yeah, you got some real estate. There's going to be action here in the XRT for a while because retail is going through their earnings season there. You got industrials, a little bit quiet. Sadly, a little quiet, but it gave you a good move there. It's just taking a breather. That's how I look at it. Financials pulling back there just a little bit. This would be the second best performing sector of the year, and today makes that difference. It was the number one sector yesterday. Today, with its decline, it loses back to real estate again. So you've got that going on, and that's pretty much it. You can look at transports, not a sector, but something I like to look at there. Gap down lower here and hopefully holding above the 200-day. And so that is what you have there. New highs and lows, there's some interesting things here. There were 27 new highs and 3 new lows. I'm going to cover a few of them as we're looking. Kroger. Stats play. I'm just pointing out, made a new high. We're looking at Kroger. 5 days later, average move from this position down 1.98%, only positive 25% of the time. So on the new high list, but more of a warning. Pepsi, cool. Little breakout here that we talked about earlier this year, and all of a sudden, that momentum is continuing today. Big move. Very, very good move there. Hits new 52-week highs, of course, because that's what we're covering. United Healthcare breaking out of the range here. This one getting stronger and stronger. Good, strong stock. I mentioned this one the other day. Very interesting stock. You see it participating strong days when the Dow is otherwise weak. That's got to be recognized there. You've got American Tower moving to highs. It's a real estate stock or a REIT. So strength there. REITs did well today. Just trying to point out something in that sector for you. And Juniper. It was a sloppy breakout we talked about yesterday, but I like to follow up with these and show kind of how they perform instead of just rattling out a bunch of names. And so far, so good. I do want to point out real quick Synopsys. That's a breakaway gap right there. That is as strong of a breakaway gap as you can have. Very, very good there. So no problems with that one. You would want to wait for a pullback maybe, but very, very strong on Synopsys. So just wanted to point that out. Lastly, we do some stocks in the news and see if I can even see your questions here today and then get ready for our class tonight. Excited about that one. Amazon, they're going to open department stores, right? Yeah, large retail locations that would be similar to department stores. Huh. How's that for going full circle, huh? Interesting. You got Robinhood. Rough day for that one, down 10% on the day. I like a comment. I don't remember his name. There was a guy on TV I just happened to be watching, and he said that Robinhood's not, that they don't just have, this is an earnings play, by the way. They don't just have competition from other brokerage firms, the little guys that are working their way up with the same platform and everything as Robinhood, but now they have competition from Vegas. And I thought that was rather interesting because he looks at it as the majority of people on Robinhood's platforms, kind of gamblers, kind of just traders. That's what they call traders, just sort of gamblers there. And now that you're getting out there with DraftKings, you can go gamble on stuff, you got football season and all this. Now their attention and their dollars may be turned away elsewhere. So that's just his opinion. I just happen to agree with it there, but very interesting. And I always wonder, the people on Robinhood have never been, or a lot of them, have never been through a significant downturn. When you email me and the market's fallen 2% and you say the market's crashed, what do I buy? I know, you're using Robinhood there. What happens if there's a real good drop that doesn't recover right away, where we fall 10% and then we hold? Because remember, a lot of you that have been around, you're used to the drop that immediately reverses. What happens if it doesn't immediately reverse? I think that's trouble there for Robinhood, but we'll see. I mean, I wish them well. It's just not a lot of good for them, actually. They still lose money. They lost more than expected. And they even said, going forward, we expect trading volumes to be a little bit less. And I did a video on Robinhood where they make their money. That crypto thing bothers me just a little bit. I'm not sure you can sustain if your revenues from each segment, meaning crypto, just don't stable out. You can't have everybody over there trading crypto and expect to do well. NVIDIA. So that was earnings there. If you look at NVIDIA, they beat by 2 cents, raised their guidance. I think sales were better than expected. And I think the most interesting thing here, I spent some time on this one. You look at gaming chips. They take the gaming chips and then what they call data center, all the chips that go behind that. They're different, some of them. And so what happens there is the gaming center area, those chips, everything that they produce, there's a lower margin. The data center has a higher margin. So I think a lot of traders or investors that follow the fundamentals here, we're looking for the data center revenues to be higher. Because data center sales to be higher, because it means you had a greater profit margin there. You'd prefer that they make more money over there, and they did. So up 4% on the day. Point out Estee Lauder, because this is a stock that we own here. Very happy with this one today. Earnings beat by a lot, actually. Raised guidance going forward and for the full year, actually. Think about it. You got to go back to work, you got to buy some makeup. And they actually said that. Makeup sales up 76%. We've owned it for some time, and that's kind of the thought process there. What's a reopening stock, right? Got to buy your makeup, and that's certainly one of the things they sell. Macy's, also in the news there, beat earnings by $1.11. Brought back their dividend, as they should. Huge beat for them. Respectable move, but not quite back to 52-week highs. This is that meme thing that was going on for a while. So is that, I believe. And so they're almost back to 52-week highs. But Macy's looking really, really strong there. A couple honorable mentions real quick. Bath & Body Works. BBWI is the ticker symbol. Remember, these guys make money. Victoria's Secret not making so much money. And that's exactly what happened. They better than expected earnings, raised their guidance, revenues as expected. They make the money. Victoria's Secret still struggling a little bit. Hey, John Deere's got earnings coming out tomorrow. It's not known for being the best quarter for them. So earnings come out tomorrow. And if you look back through history, we looked at every one of their earnings reports there. It averages a gap lower, meaning it'll start the day lower. Now, I happen to think that means it'll finish the day positive if it does gap lower, but it's only positive 48% of the time after reporting second quarter earnings. So if you look at the chart, you kind of are praying for a gap down. That leaves it extended, that leaves it oversold, and you'd probably see people decide to buy that. But if you see it gap down tomorrow, know that that's just normally what happens with this one for second quarter earnings. I don't think any other quarter actually had that scenario happen. All right, so we'll take a look here, see if I can answer your questions real quick while we're waiting. Just John Deere and Foot Locker be the ones that you want to look at tomorrow for earnings. Oh, yeah. Talking about custodial Roth IRAs. Yeah, it's a bit of a trick, isn't it? Yep. Uh-oh. I don't like that IRS word. I don't know what's going on there, but I don't want to read that one. Hey, if previous stat holds true, if the S&P doesn't fall 5% or more in the last 190 days, then we go without a 5% pullback for 250 days. Do you feel that this current pullback will not be 5% deep? This right now, what's happening is what you're saying? Well, there we go. So if you look at this pullback here, there's nothing in the recent history here that says we're going to fall even more. I'd like it to, but there's nothing that says it. Every dip, and this is a dip, that's the way you say it. It's not a crash, it's not a pullback, it's not a correction. All these words that I keep getting emailed. No, that's not it. It's a dip, right? It's a small dip here, not just over 2% yesterday, and we've recovered some of that anyways. Everything that technical traders would look at would suggest that this will continue on, make new highs, all will be good. I hope it doesn't, but that's where you stand. You have to find a lower high, and preferably you want to see this bounce. Maybe go tomorrow, maybe go into Monday a little bit, but not make a new high. And then when we have that next little down day, you want to get it slammed. That would make people convinced that the 50-day moving average would probably break. Till you see that, they say go with the flow. The flow's to the upside here. You trust every pullback until proven wrong. That's the old thing. I wear the same shirt every day. I literally do. I take this off as soon as I'm done and hang it back up. I mean, this is a newer one, but yeah, you're right. It shouldn't be against it's black actually, but there's a light there. And we'll solve that problem once we build the new set there. There was a question there, JN. Do you have to file your child's taxes and show income for your child if you want to contribute to a Roth on their behalf, regardless of whether they owe taxes? So I think you're saying maybe the child's 16 and they work wherever they work, and they made some kind of money, $500 or whatever, and they contributed that to the Roth. They have to show the earned income. They still got to file taxes, right? But you're not reporting. There's nothing to report there. Contributing to a Roth just means you were eligible, you had earned income. The two are separate from each other. It's not like you say, I had earned income, and then here we go, I put 500 into a Roth. It certainly shows up on there, but am I understanding that correctly? So yes, the child would have to contribute, or would have to file taxes because they had earned income, right? Probably a 1040 EZ or something. Is that still around, actually? I didn't do that since my daughter was little. If I misunderstood your question, let me know, because I think that's what you're talking about there. What do you think about adding to Newmont? That's been a hot one lately. That pullback is certainly something to be interested in. Don't you love, like, I think this is one of the only stocks that didn't really rally with the stock market really this year. Boy, it's a tough one to say that right here's the spot. If you're giving me just one or the other, I say you don't buy it here, or you don't add to it here. Enticing. I think you'll hold out for a little bit more. Get under 55, could you? Sure seems like it's trying that. Yeah. All in on Alibaba? No. I mean, we own it, but not all in. I'm looking for a spot to add to it, to be honest. Add it to our add to it in our international fund. But nothing yet. Still got a big question mark on it there. Yep. Kirk helping out too? Thank you. What's going to happen to the old place after you move? I suggest renting it to Subway and turn it into a... I don't know. We didn't own that place. That was a lucky timing thing for us that one came available in this area we were looking, and kind of a practice space. Just took 3 years to practice. So I don't know. I know the guy really well, actually. It seems like they got somebody already, car collector or something. Yeah. Answered your question. All right. 10 cent. Oh, man. Looking for a bottom on 10 cent. How do you know, though? Somebody asked this the other day. I'm like, I can't say it's the bottom. I mean, I like the discount there. Certainly enticing. And you look at it this way. If you're wrong, you can only lose $7. I mean, there's not much more to go from here. So feels a little bit more like a lottery ticket. And if you were going to start a position, I am not suggesting you start a position here. I think tomorrow will be positive. It'll be up, but I don't know from there. I think if you're going to start a position here, you take a little piece of whatever you're thinking about, go in with that, let it prove to you bounce. Would you care if you paid $9 for the next piece of your position only to see it forming an uptrend then, and maybe the media changes a little bit, China relaxes a little, and all that kind of fades away? I'd rather pay $1 or $2 more to be in that position. Yeah, myself. Yep, and we talked about Newmont there for you. And so what I'm going to do is try to get ready for our class tonight. Cool and a fun little trick you could do in your 401k to pay less taxes. And my new phrase in life is going to be, don't pay the IRS what they ask for, pay what you owe them. So any little thing that you can do to save a few dollars, I'm going to do it. And tonight, if this affects any client that I'm sharing this, you will officially have saved more than you will ever pay us here at Jazz. And so I'm always looking to do things like that. Add value and just keep growing, man. In the meantime, you guys keep your dough straight. I will see you Monday. Won't be here tomorrow. We'll be building, getting things ready to go. Thanks for all your support, and enjoy the rest of your day.